Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video, we're taking a quick look at a trade idea that I'm currently monitoring. It is to do with the S&P 500, or at least this is a CFD which tracks the price of the S&P 500 futures. And there's been quite a lot going on this week. We've had quite a lot of earnings. Like we had bad Microsoft earnings earlier this week, which actually triggered this dip that you can see there on the one-day candlestick down towards the 200-day moving average. But Tesla earnings were then better than expected. You've seen like a 10% jump in Tesla as a result. And if I just quickly show you the data that we've just had out, US GDP in Q4 grew at a faster than expected annualized quarterly rate of 2.9%, above expectations for 2.6%. Now, there's a lot of chatter today amongst analysts and commentators, market commentators, that GDP number raises the chance that the Fed might actually be able to achieve what they want in 2023, which is a soft landing. That's basically where they successfully bring down inflation without causing a recession. I mean, I think that might still be a little bit too optimistic. You've got a lot of leading economic indicators which are pointing towards a recession sometime later this year, like the PMIs, the leading indicator. There's one called the leading index. A lot of things are pointing to the fact that the US economy is weakening, but Q4 was better than expected. And that's injected a bit of optimism alongside the decent Tesla earnings into the market. And the most important thing for me here now is actually the technicals, because the fact that we retested the 200-day moving average yesterday and found such strong support, because actually you can see here, it wasn't just the 200-day moving average, it was the 50 and the 21-day moving average, all in the 3,920 to 50 area, all gave support. And look at this, we've edged above this downtrend, which has been in place since right at the beginning of 2022, that we haven't been able to get above. Now, if we are able to hold above this downtrend, perhaps into the end of the weekend, like just today and tomorrow, I think the door is open potentially for a bit of a grind higher towards the December highs in the 4,140 area. The potential driver of this could be continued decent earnings, could be continued evidence that the US economy is doing a little bit better than expected, but inflation's still coming down nicely, which is the evidence that we just had today. And you know, we've had plenty of evidence that inflation's coming down very, very quickly. We've also got the Fed meeting coming up next week, and you know the Fed is expected to again slow the pace of rate hikes to 25 basis points. The tone of the Fed on the outlook for further rate increases will be very, very important. But you know, if there's any hint that they could be considering maybe not going as high as what they've previously been saying, they have previously been talking about interest rates needing to go above 5%. But if there's any hint of them maybe backing off from that a little bit, then I think all of these factors could contribute to a steady grind higher in the next week or 2 weeks, 3 weeks towards these December highs. You know, and the technical buying potentially could be a big thing here as well, because the break above this downtrend from a technical perspective is very important. It shifts a potential change in the market's near-term direction, and is potential sort of technical confirmation that this bottom that we printed in October could be the bottom now for this market. Obviously, you know, we've got a potential recession coming up later next year, which could ruin this optimism. But for now, I'm thinking there could be a cool higher in the S&P 500. So yeah, guys, hope you enjoyed the video. Hope you all found it informative, and I'll see you all in the next one.